What's up, everybody? This is your favorite market host, Max Pitts. I'm back with another Trades and Gains market recap. Sorry I missed yesterday. I had a sinus infection. I passed out at like 8 o'clock at night. And I honestly just did not have the energy or wanted to be on camera to really explain what happened yesterday. We all saw it. But don't worry, I'm back today and we're going to go over everything. So buckle up because today was a wild ride on Wall Street. But when isn't it? Let's be honest, folks. Nvidia and Tesla got hammered, dragging the Nasdaq down over 1.3% as investors braced for Nvidia's earnings and worried about Tesla's massive European sales decline. Meanwhile, Bitcoin crashed below 90K and consumer confidence absolutely tanked to its lowest level in almost 4 years, folks. But somehow the Dow managed to sneak into the green. Let's break down what happened and what it means for the rest of the week. So, tech wreck. Nvidia, Tesla, and the Nasdaq all took hits like they were getting punched by like Mike Tyson in the back in his heyday. So I don't know what I just said there. Anyways, Nvidia down 2% ahead of tomorrow's earnings call. Investors are jittery about AI chip delays and new Trump tariffs. Tesla is down 8%. The EV maker just reported a 45, yes, you've heard that right, 45% drop in European sales in January. Amazon, Microsoft, and Meta are all slipping over 1% as the broader tech sector took a complete and absolute beating today. Now, why does this matter? Nvidia earnings tomorrow are a make or break for AI stocks. Semiconductors, the people who are given shovels and picks for this gold rush and this bubble that they've created, they will all be affected by this report in some way. Tesla's European weakness could mean bigger EV demand problems that we may be facing ahead as well. And if big tech keeps slipping, the entire market, yes, the entirety of the market could be in trouble, folks. So we need to pay attention. We need to buckle up here. All right. Consumer confidence falls off of a cliff like a cartoon skit, folks. Today's biggest economic shock. Consumer confidence saw its biggest monthly decline in nearly 4 years, folks. February consumer confidence index was 98.3, which is down from 105 in January. Expectations of the index, 72.9. Anything below 80 signals a potential recession. And the 12-month inflation expectations jumped from 5.2% up to 6%. Yeesh. Talk about a rough day at the office. Now, the translation of all this, people are losing faith in the economy. Fears of inflation and recession are creeping back in. And spending could slow down, which means trouble for retail and consumer-driven stocks. Think Walmart, think Costco, right? And finally, the Fed is watching. If confidence keeps dropping, rate cut bets might get even stronger. Now, Bitcoin crashed below 90K today. Yeah, we get it. The crypto market took a beating as well, with Bitcoin dropping over 6% to its lowest level since November. Bitcoin hit 86K overnight before stabilizing around 88K at the close. Ethereum fell 6%, bouncing off lows near 2,500, and crypto stocks got wrecked. Coinbase dropped 8%, while MicroStrategy, aka Mr., tanked over 10%. Now, why does this matter exactly? The crypto rally fueled by Trump's election is reversing. Bitcoin is now down 17% in the last month alone. Think about that. Think about it, baby. Analysts at Bernstein still think Bitcoin is headed to 200K in the next 12 months, but for now, sentiment is weak. If Bitcoin keeps falling, expect more pain for crypto-related stocks as well. We also had Trump tariff threats shake the market to its core. Like a scared girl in her boots on the corner, baby. Trump threw more fuel on the fire today, reviving tariff threats on Mexico and Canada and hinting at even tougher chip export restrictions on China. Yes, and by the way, China is responsible for 54% of the buying power, essentially, of the chip market in the world. So, stressful. 10-year Treasury yield fell to 4.3%. Traders think tariffs will slow the economy and increase the odds of a Fed rate cut. Nvidia is already facing tariff pressure, and now the AI chip industry is bracing for more export controls. If tariffs actually hit next week, expect volatility to ramp up like big time, baby, because automakers, semiconductors, and manufacturing stocks are all going to be on the fritz because they're going to have to reorganize things. You hear about Ford and GM already having to figure out certain pipelines to avoid these tariff restrictions. So the key takeaways here are tariff equals higher inflation risk, which equals Fed to stay cautious. We have more chip restrictions, which is going to equal to possible AI slowdown, and watch Nvidia's earnings for clarity on all of this. And if Trump keeps pushing tariffs, expect more market jitters ahead. We also had oil prices sink to 2-month lows. We had WTI crude is down 2.5% to $69 a barrel. This is the lowest level since December. We also had Brent crude drop 2.5% to $73 a barrel, and OPEC concerns plus fresh Iran sanctions equals mixed demand outlook here. Now, what does this mean exactly? Lower oil prices equals cheaper gas for consumers, which could help ease inflation fears. And energy stocks could take a hit if oil keeps sliding. Watch XLE and major oil players like ExxonMobil, aka #XOM. Now, Tesla's European nightmare, it's down 45%. Tesla just reported a brutal 45% drop in European sales for January, and the stock plummeted over 8%. Only 9,945 Tesla EVs were registered in Europe last month, down from 18,161 just a year ago. Meanwhile, total EV sales in Europe jumped 37%, so demand is there, just not for Tesla. Tesla stocks is now down over 25% year to date, one of the worst performers in the Magnificent Seven. What's happening exactly? New competitors from Volkswagen, Renault, and China's SAIC are taking market share. Tesla's Model Y is in the middle of a refresh, so buyers might be holding off for the new version, and Musk's political controversies aren't helping either. And final thoughts here. Big picture, tech stocks are struggling. If Nvidia flops tomorrow, expect more pain. Bitcoin's crash could shake confidence in risk assessment, and consumer confidence is nosediving, which could impact corporate earnings. Finally, Trump's tariffs are aiding uncertainty to an already shaky market. The bullish scenario here is if Nvidia's earnings are strong, AI stocks could see a bounce here. Lower oil prices could ease inflation fears, making a Fed rate more likely. Fed cut rate more likely. If consumer confidence stabilizes, spending could pick back up as well. The bear scenario is if Nvidia disappoints, AI stocks could tank, dragging down the whole market lower. If Bitcoin keeps sliding, crypto stocks could face more pain. And if tariffs actually go into effect, expect volatility in the global markets. Don't worry though, because we're going to keep covering everything every day. But we'll be right back because we have to go over some options flow data for the day so we can see what the institutions are buying, right, babe? All right, be right back. All right, folks, we're back. We're going to talk about some options activity from our favorite data screeners, Investor Central Club. By the way, I will leave a link in the description of this video if you would like to sign up to get the same data that I give to you all on a daily basis. Anyways, let's dive right into this. Section 1, we have options flow, the key players, right? Here's what stood out in today's flow. We had Nvidia with 61.2 million in flow with 25.5 million in calls versus 35.7 million in puts. And the most common trade were $200 puts expiring on March 7th. 39 hits total. What's happening? Heavy put activity suggests institutions are hedging risk going into Nvidia's earnings report this week, aka tomorrow. The Trump administration potential China export restrictions could hit Nvidia's business hard. And don't forget, there are still concerns about Blackwell chip delays, which means for some traders, they are bracing for a disappointment in guidance, especially when you have your biggest customers who put $44 billion into buying those chips start to scale back a little bit. Maybe a red flag. Maybe a little bit of red flag, folks. Anyways, key takeaway, institutions aren't necessarily bearish on Nvidia long term, but they are playing defense before earnings. Defense, because defense wins championships and millions, people. Now, Tesla had 45 million in total flow. We had calls at 17.5 million versus puts at 27.4 million, with the most common strike being the 305 puts expiring on March 7th. What's happening? Tesla dropped 8% yesterday after EV sales in Europe fell 45% year over year in January. Put flow outweighs call flow, which means institutions might be positioning for more downside in the intermin. Tesla has also lagged the market this year. Down 25% year to date, investors are questioning whether stock's valuation still makes sense with the competition starting to heat up, especially in Europe and other countries. Key takeaway: if Tesla continues to struggle internationally, we could see a $300 as a next major level of support for it. SPY, we had 47.2 million in total flow. We had 9.7 million in calls versus 37.4 million in puts. Most common trade was the 565 puts expiring March 21st. We had 7 hits on that total. What's happening? SPY saw a massive influx of put buying, which suggests institutions are hedging against broader market downside. Consumer confidence fell off a cliff, hitting its lowest level in 4 years, raising concerns that economic growth is indeed slowing. Bitcoin also tanked, down below 90K for the first time since November. The risk-off sentiment is creeping into equities as well. If SPY breaks below 590, the market could see more short-term volatility. Now, for the dark pools, we saw SPY with 1 million shares traded at 592.57, Amazon with 2 million shares traded at 212.80, Berkshire Hathaway 850,000 shares at 499.80, and Microsoft, we had 750K shares at 397.90. Now, what does this tell us? SPY is seeing a big dark pool trade. Could mean institutions are either loading up on shares at support or distributing ahead of a drop. Watch 590 as a key level. Amazon saw a massive block trade, which could mean large institutions are positioning for long-term growth as it expands AI and cloud operations. And Berkshire Hathaway's trade suggests that Warren Buffett's fund could be increasing exposure in high-quality names. The key takeaway: dark pool activity is mixed, but SPY's 592.50 level is battleground. Keep an eye on whether buyers start to step in. Now, our bearish factors here are tech weakness. Nvidia and Tesla are leading the NASDAQ lower. We have tariff fears with Trump's trade policy shifts are making markets jittery, and weak consumer confidence could signal slowing economic growth. And our bullish factors here, Amazon and Microsoft are seeing dark pool activity, potential accumulation here, and markets still hovering near all-time highs. This could be a buying opportunity for the retail trader. And finally, the Fed is still in play. Rate cut bets for June are indeed increasing. Now, our final takeaway of the day: if SPY holds above 590, we could see dip buyers step in for a bounce. If Nvidia delivers a strong earnings report, it could spark an AI rally, but if guidance is weak, expect more downside for everybody involved in that sector. And tech is in danger territory. If it breaks 300, things could get ugly. And that's all we have today, folks. That is your market report. Everything from what happened in the markets down to what happened in the dark pools and then institutions and with the options flow and everything like that. Make sure you like and subscribe if you found this video informational, and hit that bell notification so you never miss a Trades and Gains video, because I make these every day when I'm not sick. All right? Because I'm here for the people, by the people, to the people. Love you all. Have a great night, and I'll see you in the next episode.